Hey, what's going on, guys? Welcome back to Way Up Trading. Today we're going to be going over a couple different setups I'm seeing for the week coming forward, how we're going to prepare in order to take some great trades, see what stocks are really making moves despite what's happening on the market. Market had a nasty sell-off going into this past Friday on the closing of the week from 453 SPY all the way down to roughly about 447 on the close. Crazy downside move. However, I am seeing a couple different stocks that are going to be following the trend. We're going to try to make sure we're prepared to see what's happening next, and we're going to do all of that and more. Get ready for this trading week. It's going to be a wild one. CPI is coming up, as well as PPI data coming up this week. Should be another crazy week in the markets, but we're going to take a look at all these different ideas going forward into the week, and we're going to do all of that and more right after this. Alright, right now I got the SPY pulled up here. This is going to be the daily chart. I use a 23-hour in order for us to see after hours move included on all the time frames as well. Getting a better idea and indication of how things are moving overall. And this is just a quick recap on how things have been moving over the last few years. Overall, the SPY, we've had this descending broadening wedge that we came in at the end of 2021, but we got the downside flow after touching the all-time highs of about 479 before coming back down. Descending broadening wedge has been the bear market trend that we've seen on several stocks, several tickers, also the entire market. Here you get this broadening pattern on the downside, which is a reversal style pattern. Once you do not touch the bottom trend line, you can start to see upside very rapidly and to get a break to the upside for reversal. And that's exactly what played out on the macro time frames here for the SPY. Yeah, you usually respect the midline. Basically, you can see that after getting this descending broadening wedge, we finally did break out of it roughly around the 400 mark earlier back in March of 2023, where we got a breakout, a retest of this descending broadening wedge within a smaller descending broadening wedge. As you can see, another reversal, basically retesting the top of the breakout for this particular pattern until we started moving higher into the breaking the 404 mark, moving upwards into where we currently are. Before doing so, we created a broadening top pattern, which actually played to the upside. We had a B, C, D, E move with a partial decline, which bounced off about the 410, 411 mark before breaking through higher, breaking the 2009 crash line, which I have here as this teal line, which is the very place from the very bottom of the 2009 crash, 2008 crash. And once this broke upward, we saw a nice upward continuation here. Moving into the 12 hour, so my lines can get put back in place here. So now we have this break to the upside. We broke through, created a bullish channel above the 2008 crash line here, which is basically where we've been playing since the beginning of 2023. Since January of 2023, we've been in a bullish trend to the upside, pretty much a bull market run that we've had with several stocks moving to the upside, several short squeezes we've been having ever since crossing over this line, which was again the 2009-2008 crash line that we needed to cross. And once we did, everything has been on the upside move. So I am at some point looking to retest that crash line once again. And if it's over the next couple of weeks going into September, I'd feel that'd be somewhere in the 434 to 430 to 434 mark, somewhere around there, before potentially having a bounce and move up higher. But if we do lose that line, I'd be looking to look more towards downside into the level somewhere around the 425 mark, 411 mark, and then as far down as almost 404, which is where I have mentioned that I've had picked up protective puts way up here just in case of a move to the downside, being that this move was overextended. You can see a move like this is overextended over the average trading line that I've been able to see over the last couple even years. So basically, I'm expecting a retest of that breakout. We did lose this bull channel over the last couple of days. We did also just fill this gap that we had roughly at about 446, and that's why I have this big word gap here. But that's all said and done. We're going to remove the gap word off of our chart. We don't need it anymore, and we're going to take a look at closer indications and closer indicators of what took place this past Friday, where we got that nasty sell-off and how that actually wound up playing out. So we'll pull up the chart real quick and take a look a little bit closer. So basically, we have been playing this, again, this bull channel that's been going on since the beginning of 2023. We recently had it back in July, end of July. We looked like we started to form a head and shoulders. After having this breakout of the bull channel to the upside, things started to, you can obviously see this was a good opportunity to short this thing back down. You can see it was very well taken on July 27th. Heavy downside move here after this push up out of the bull channel, kind of an out of bounds area where everyone just piled in on shorts. This thing was brought all the way back down to this midline before having a bounce, and then started to trade itself sideways to the downside, looking for possible upside moves, but was constantly getting rejected by last supply all the way down to the bottom of the bull channel. So most recent price action, the beginning of August, August 3rd, you can see we had a slight bounce underneath the bull channel, trying to actually catch an upside move back upwards. But by then we had crosses on some major EMAs. I'm going to go and turn on the indicators once again. And just from an EMA standpoint here, you can take a look. See our major crosses took place on the downside move. You can see the 921s are represented by the yellow check marks or plus signs here. And the purples are also going to be the 1348 downside crosses as well. Red line is going to represent the 200 moving average. And the gray thicker line is going to represent the smooth moving average overall, which is an indicator I like to use as a confirmation indicator. I recommend it personally to add this to your charts because it definitely does give some great insight on how moves can actually take place to the up or downside, depending whether or not price action is happening above or below that line. So in this case, you can see after we got those major crosses and we lost a 200 moving average, now this is the 30-minute chart, everything continues to spill downwards. Look for support down in these areas here, but is unable to completely finish. From a patterns perspective, you can see that this actually wound up forming a ascending broadening wedge using the bottom of the bull channel as a bottom support. Now, ascending broadening wedges are a bearish type of reversal pattern. We normally talk about descending broadening wedges here. You noticed we talked about it a little earlier on the SPY chart, but this was an ascending version of it, which is an opposite reaction. So you can see with this type of move, as you get these bounces, you usually will play A, B, C, D, and E, which is again a 5-touch move from the bottom and top. So you can call this from the downside move, you can call this A, B, C, D, E. One last run up, smooth moving average you can see, as well as the 200 moving average is met in this area, and everyone who caught this play caught a major downside move. If you played zero DTEs, those puts actually wound up going well over 2,000%. I mean, it was a complete just knife the entire day. We're moving a little closer to get a better view of this thing, but this thing was a complete knife all the way from 453, ran all the way down to our close, which is roughly about 446. Huge move to the downside, $7 drop in one particular session. Huge downside move. Anyone who caught that, congratulations on that downside. Huge play, huge wins for a lot of people that played the downside, that noticed this pattern and were able to take advantage of it downward. So in this case, we actually wound up losing the bull channel like I mentioned before, and then now we're looking to most likely start to play those downside supports. From a harmonics perspective, you can see that we did lose this area. We have our 928, 921 crosses to the downside, below the 200 moving averages like we mentioned before in the 30 minutes and 1 hour. 921 cross to the downside, 1348 to the downside, off of our harmonic optimal price, which was at 451.31. We did wick slightly above that to that 453 level we talked about a little earlier, and you can see it was immediately rejected. Lines up very perfectly with the yellow line that I have here, yellow moving average, 21 moving average, as well as 48 moving average, that green line you can see here. Once that rejection happened, we're looking to the downside. Momentum is now picking up. You can see volume on that downside move. These red bars are starting to increase in overall strength. Huge area right now at this particular point. Our next target, in my opinion, is going to be the 443 area. We did start to partially, or I believe we actually fully filled that gap to the downside, but there is still more downside pressure. I don't think this move to the downside is over. So puts, in my opinion, are going to be the more safe or more advantageous play to the downside while we start to see ourselves moving into the big data that's coming up on the week. Again, we have CPI and PPI coming up this week, so do pay attention to that. I believe that they may possibly be more to the bullish side, but who knows? The way things have to happen right now, I believe we are in a corrective phase in the markets, so do pay attention, do be prepared. But I do believe we still need to hit 443 area quite soon, and possibly even a little bit lower, in order for us to start to reaccumulate, to potentially move back up, playing some of those support levels we talked about earlier on before starting to make that move. So pay attention to what's happening on the week. Overall, we are in this downtrend, so be safe on your upside moves. Play the trend for what it is, and let's make some money on this thing both directions. All right, as far as plays I'm liking to the upside, to the long side right now, NIO is definitely on the top of the list right at this particular point in time. I'm very much a fan of the strength that it actually held off into that sell-off that took place on Friday on the entire market. It is holding a particular area I'd like it to hold. I still do see potential downside. Yes, we did have a negative 4.79% downward move on the stock after a nice opening up to about 450, almost $16 on that push up that took place on Friday. Actually, a little bit above 16 bucks. 16.21 wound up being the high on Friday. Rejected here. It looks almost like a gravestone doji that took place here on this push down. And this is the 2-day chart. So this is not a completed move just yet. So in this particular case, I do still see this playing potentially down a little bit more, finding support roughly around the 1451 mark. 1451, I'd be looking to actually enter back into calls. Longer term, I do still see us hitting the upside somewhere around the $18 mark on this particular stock. If you're already in, maybe a good time to average into a further out strike. But I'm looking to go a little bit longer, most likely to the end of the month, being that I'm expecting the moves to happen more toward the OPEX dates that are going to be coming out on the 18th. So roughly about the week after the 18th, I believe we'll start to see some kind of a bounce on NIO specifically. If we're looking to play any upside stocks, this is going to be one of them in my humble opinion. So as long as we hold that 1450 range, I'm looking to go long. If we don't hold 1450, be careful because we can start to come back to hit a support level roughly around the $12.85 mark, which would be the 9 EMA on the 2-day chart. Going a little bit closer here to the 1-day. 9 EMA is not yet broken on the 1-day chart. I'd be possibly looking for a first level support before breaking that if we go to the downside. $14 flat would be the absolute last point of support I'd be looking for considering continuing to average into calls for further into the end of the month. If it breaks that level, I'd be looking for downside puts going toward that $12 mark, $12.85 or so, as a downside move. So right now it's looking really good and positive going to the upside for me for NIO, so I'm looking at that play going forward. All right, as far as plays I'm liking to the upside, to the long side right now, NIO is definitely on the top of the list right at this particular point in time. I'm very much a fan of the strength that it actually held off into that sell-off that took place on Friday on the entire market. It is holding a particular area I'd like it to hold. I still do see potential downside. Yes, we did have a negative 4.79% downward on the stock after a nice opening up to about 450, almost 16 bucks on that push up that took place on Friday. Actually, above 16 bucks, 16.21 wound up being the high on Friday. Rejected here. It looks almost like a gravestone doji that took place here on this push down. And this is the 2-day chart, so this is not completed just yet. So in this particular case, I do still see this playing potentially down a little bit more, finding support roughly around the 1451 mark. 1451, I'd be looking to actually enter back into calls. Longer term, I do still see us hitting the upside somewhere around the $18 mark on this particular stock. If you're already in, maybe a good time to average into a further out strike. But I'm looking to go a little bit longer, most likely to the end of the month, being that I'm expecting to happen more toward the OPEX dates that are going to be coming out on the 18th. So roughly about the week after the 18th, I believe we'll start to see some kind of a bounce on NIO specifically. If we're looking to play any upside stocks, one of them in my humble opinion. So as long as we hold that 1450 range, I'm looking to go long. If we don't hold 1450, be careful because start to come back to hit a support level roughly around the $12.85 mark. 9 EMA 2-day chart. Going a little bit closer here to the 1-day. 9 EMA is not yet broken on the 1-day chart. I'd be possibly looking for a first level support before breaking that if we the downside. $14 flat would be the last point of support I'd be for considering continuing to average into calls for further into the end of the month. If it breaks that level, I'd be more downside puts going toward that $12 mark, $12.85 or so, as a downside. So right now it's looking really good and positive going to the upside for me for NIO, so I'm looking at that play going forward. Now we're going to take a look at Disney here going into earnings this week. And Disney actually is an interesting one. I know there's a lot of things that are happening on a news front with Disney, as well as what's happening with the writer's strike on this particular one. It's an interesting one because I do see a bullish type of setup on this particular stock going into earnings. So I do see a reversal move here. This is more of a reversal style pattern. And we can see there's a slight uptrend here to the upside as long as it can hold this particular area or this little bit of an uptrend that's been forming. This was served as a spring, in my opinion, down here at the 485 mark or $85.40 mark. As you can see it rocketed back up pretty high this past Friday, until we got that nasty sell-off. Pretty much everything got that nasty sell-off as a SPY dumped very hard, but it did maintain relative strength here. Almost a false breakout of this level here. Ascending triangle. Broke out, came back, and still held, looking like it wants another push up out of here. So in this particular case, I believe earnings are coming up in just a little bit. I am expecting some upside targets to get hit here on this one going into the next couple of days. Levels I like to see broken on this one, 86.32 would be the next level I want to see broken to start to break us back into a momentum move to the upside. That would be a cross above the 21 EMA on 15-minute time frame. I'm going to play just a 15-minute because we're looking at just this week. I find personally I have success for weekly type contracts, a weekly type in a 15-minute chart, because it gives me a nice indication of the day-to-day action as well as what's happening 10th week and how the shorter term can influence the longer term stock. So in this case, we are still underneath the 200 moving average in this 15-minute time frame, but again, if we can go and cross this $86.32 mark above the 21 EMA, I can start to see some type to the upside, testing the 200 moving average, something like this, maybe even coming back down to test support once again and start to climb and get above this smooth moving average and start to get its way up toward the $87.10 mark. So upside, in my opinion, is going to be the move into earnings. Now, I wouldn't advise holding it past earnings. Disney is a slow-moving stock, in my opinion. I do have shares and things like that. However, I would be accumulating. I'd probably play shares more so to the upside for now, and then wait till after earnings to see how things maneuver in order to possibly even purchase lower. I'm bullish on Disney longer term. However, in this particular time frame with things going on news-wise, you got to be really careful. So I wouldn't particularly play into the earnings port. However, there is some slight upside that is obviously possible with my patterns that I have set up here, going towards playing this. Again, the upside, again, $87.10. If we can go ahead and break that, I have an 800 moving average here. Very hard to see, but a thin gray line. 800 moving average would be another area to test and break. Hopefully that can possibly happen over the next 2 days going into earnings, and then we can possibly see a target 2 reaction up to the $88.10 mark. And I think that would be the absolute top till it possibly comes back down with the rest of the market. So we'll see how things go. That's my little indication on my little setup here for Disney. I'm going to be looking to take calls going into tomorrow, as long as we can hold or break above that $86.32 mark. Calls into Monday would be my play. Looking at $87 calls, close to the money, very safe, and that's the play. All right, another particular stock I'm actually kind of bullish on right now, and still am. I mean, even though it puts us through a lot of stress on this particular name, it is AMD. AMD is another one I'm actually looking at as a very strong stock, even when the market took a huge tumble. I mean, obviously they did a pretty decent job on earnings. It wasn't as bad as a lot of stocks, the way this thing is operated, and actually has still been able to, even though it sold off pretty aggressively to sell the news type of an event, they did pretty well on earnings, and it was really uncalled for. But in my opinion, this thing just bounced right back up very aggressively over the last couple of days, almost reclaiming the 120 mark that it was able to break over its push up to about 126 before being rejected during the earnings call. Still on an upside move, still on an upside trend ever since the fall off back at the end of August 2nd, and has been steadily riding up towards it had a nice little touch here about 118, but it has overall been playing pretty much a sideways grind, trying to break out of its downtrend that it's been in for the last months now, since roughly about June. And almost a pennant like setup is here on a weekly, trying to break this range trading. It's been doing anywhere between the 108 109 mark to about 120 mark has been an easy trade. Given despite the volatility that goes on with this particular stock. I mean, this thing like nobody's business on the shorter term. Lots of shares are traded on this thing, but overall, the actual move is still in a bull pennant setup. A lot of the major restrictions here, roughly around the 113 to about 116 range. Getting above it usually gives us a nice push to about 120. Getting below it gets us to retest the bottom of these white lines there as the trading range that it's been for several months now. Shorter time frames, looking at the 30-minute. Right now, you're holding a nice level of support here after that sell-off, after a huge day on AMD on Friday. Sell-off still wound up leaving a positive close here, a 2.36% positive on Friday's price action. Had a nice a low of 113 and ran all the way up to 1885 before being rejected here, which is the top of the bull pennant that I showed you a few seconds ago. I'm looking for it to possibly hold and start to potentially push higher, or at least hold this area. Regardless of what's happening with the market, it is potential possibility that we can get a rejection coming down, but it did hold really nicely after market on Friday. We're going to have to see how things play out going into, again, PPI and CPI that happened this week. So that's pretty much what everything is about on AMD. We'll take a look and see what kind of crosses we have here and what potential targets I'm looking at on this thing. In the meantime, we did get rejected off the 118.85 mark we talked about a few seconds ago. We are falling below some smooth moving average lines. We did get our crosses to the downside. Not just yet, but it's a potential that we can get that on Monday's price action. If we do cross that and lose the 115.54, 115.50 area, I'm looking to see this thing go back downwards to around the 114 mark. For a potential bounce off of the 200 moving average, which is sitting somewhere around the 114.30, 114.15 area, for a potential bounce to see how things play out, or at least hold that level of support. If those areas do potentially break, I'll test back at around the 109 to 110 region before seeing how things play out with the rest of the market. But overall, relative strength for the longer time frames, 4 hour, does look like it still wants to push a little bit more. There's a potential to, move up towards somewhere, breaking this downtrend, this red line that I have here. It's a possibility we can start to see 120 longer term, but again, it's a toss up with the market. I'm not really going to play this. I just wanted to cover it because it is a fan favorite, and I do believe that there is a chance, but we do need to see how things play out within the first couple of minutes to a few hours in the trading day on Monday, see how the market responds to how things took place on Friday's close, and then from there we can make a decision. Relative strength wise, AMD in my opinion is still on the rise up. You can see on the 4 hour time frame we do have our crosses. 921 and 1348 cross to the upside are still valid. We're just looking to retrace here. Volume is steadily increasing on the downside, so that's the reason that this looks a little bit funky. Overall, longer term, still bullish, still potentially adding shares here, all the way down to about 110. I'd be really concerned if we did break that 110, 108 level. At the very, very least, I have it marked here 108.64. If we did lose those levels, I'd start to get a little afraid. However, right now, I do believe this is one of the only stocks I do still see a very, very sharp move to the upside at some point, similar to how NVIDIA did not that long ago. We're going to see how things work out, but that's my take on AMC on AMD, and we're going to take a quick further look on this thing as things progress over the next couple of trades. All right. AMC pulled up here on the charts. I'm going to go over it real fast to see what I'm thinking it's going to look like. We're going to be making moves going into earnings real quick, and just got a quick indication of how we're looking. Right now, we're really struggling trying to get over the 48 moving average on the 48 EMA on the 2-day chart. It lines up very, very well with the 4 hour chart where I have my smooth moving average, which I've been talking about several different occasions. This is basically forming a little bit of a ascending triangle trying to break out this level. You can see after we got the breakthrough on run up to 100% run up last Friday, once it crossed this level on the average, you got this huge surge, I guess buying, covering, whatever that took place on that date. This thing ran all the way up. Obviously, we hit just about 879 and back down, looking at the potential gap. After it broke that smooth moving average again, you saw that there was a nice downside move. Thought this would turn around, but they drowned the volume out. But it was then rejected, broke the smooth moving average once again to try to almost fill the gap. Was never quite fully filled. The gap was sitting somewhere around 448, roughly bouncing around back around, and kind of snaking upwards in an ascending triangle type of fashion, looking to break this level again. 508 being the high of the day this past Friday. Once you start breaking those levels, I expect us to start hitting 516 to 535 very easily going into Monday's price action, and then from there start to see our move on earnings day, looking to hit the $6 and change mark. I'm going to pull up some levels real quick to see how things look there, indicators as well as on our chart. You can see we have couple of different areas of downside resistances that have been broken. Looking to play the upside move, potentially hit again around 613, which is my main area I've been talking about for several weeks on end. 613, I believe, is the area that would that would actually break the accumulation phase on the stock to start to push higher up, and that's pretty much supported on a couple different time frames. I'll go ahead and pull up my longer dated chart here. This is the 5-day chart, and you can see this pretty much encompasses the entire descending broadening wedge setup we've been talking about for the longest on AMC. It also goes along with a bullish bat pattern reversal type of trend ever run up to 72 back to squeeze. Underneath this level of 613, everything that's been happening, in my opinion, has been a macro spring level looking to load and push up towards the higher level. Again, I have a target 2 sitting about $29.85. I've been calling it for a while now that this thing, I believe, is still going to touch that level in some time frame. The longer this takes, the harder it's rip to the upside. That's just basics of how the stock market works. The longer it's suppressed, the harder to move. And I believe as time goes on, these EMAs and SMAs start to compress and moves will be a lot more violent to the upside. Right now, 613 actually sitting along with the downtrend 48 moving average on the 5-day chart. And that would show once that's crossed, you can see there was a rejection here. If you look at this little bit of a wick, showed the rejection. This again does not include the after hours move, but the daytime moves actually showed that exact wick on the 613 mark again. So once we get above 613, I believe the move is start to accumulate very rapidly up toward the upside. The only major EMAs that I'm having at this point would be somewhere around $7.86 mark. From there, $8 and change, and then again we're talking about $9.19 area. I'd be looking to at least get to touch and hold September, or excuse me, going into the end of August before starting to accumulate and push higher towards those levels we're looking at. I'm talking about the 20 level and above.